Let's take a look at some charts on Grin from this week's article on Brave New Coin. So Grin is a privacy coin with default privacy, much like Monero. So things like active addresses and transaction volume are obscured and cannot be determined looking at the on-chain data. So for that reason alone, it's difficult to compare XMR and Grin, for example, to Dash, Zeek, DCR, and Pivx. Grin is currently bottom in the market cap amongst the privacy coins. And there are probably other coins that you could add to this privacy coin list that do similar things that Dash and Zcash do. But as far as I'm aware, there aren't any coins other than Grin and Monero that have default privacy. I'm sure there are like 5 million coins, so I'm sure there are a couple, but they're not on my radar at least. Grin is also at the bottom of the ladder for most every metric except transactions per day. It's got more transactions than Pivx does. I think part of that is similar to Monero, how there is like on-chain mixing built in. I think that plays a part in this. Dash, Zcash, and DCR all have that on-chain mixing as well, which I think is why Dash is so high up there. But in general, Grin is very young and the inflation is very high, so it's probably where I'd expect it to be amongst its peers. Maybe give it a couple years and this picture might change, but as it stands now, this makes sense to me. I mean, inflation's at 60 to 70%. This is the fill here. It's going to continue to decline, much like Monero, how it's just continuous deflation over time. But as it stands right now, it's just hard to buy and hold Grin and believe it'll store value, because you'll get inflated to death. Another thing you're seeing here is the difficulty on the chain just die off. My guess is the limited amount of ASICs on the chain originally became unprofitable over time, and anybody who's not a hobbyist holding for the long term just stops mining it. Grin's algorithm switches between being advantageous for CPUs and being advantageous for ASICs. This is an attempt to prevent mass ASICs on the chain. There are 4 ASICs that are mineable with Grin, mineable for Grin, that I could find, but I couldn't really find the profitability stats for them. But there have been a few other companies, big companies like Silicon, who have said that they've canceled Grin orders in the meantime. So it might seem odd, but I don't really expect Grin to do much of anything until those big name ASIC people decide to get on board, which may never happen because of the way Grin's algorithm is baked in to the protocol. But I think if the big ASIC guys say, okay, we have enough orders and interest for ASICs for Grin, that means that the profitability is at least there. And if the profitability is there, that may shift over into a price increase temporarily for Grin. It's a weird give and take, because if the chain becomes profitable enough for the ASICs to mine, then people will mine it and sell to get a ROI, return on investment, and that'll hold price down. So it's a weird cycle. Looking at transactions per day in the line here and fees in the fill, you can see fees have continued to decline over time along with transactions per day. These spikes may be related to mining pool payouts. Now, when transactions per day mirrors difficulty, I tend to think, or hash rate, for example, I tend to think that all of this is miners and not organic economic utility or activity. It's just miners collecting their reward and moving to an exchange or whatever and selling. In a vacuum, certainly not bullish to see transactions hitting an all-time high in mid-December and then month over month, week over week, just continuing to drop off. So I really don't expect price to recover until transactions per day starts to pick up and there's some more on-chain activity to basically counteract the miner selling. Because I think right now there's two people. There's the Grin believers and long-term holders, and people just selling Grin as soon as they mine it. I doubt, based on the on-chain activity, that there's many transactions of any kind going on here. There's 2,000 transactions per day or less, which is more than some chains, but all in all, it's really not much. And one of the other reasons for Grin's low price, declining price, for any coin, it's more advantageous to be listed on multiple exchanges, and as a privacy coin, especially a default privacy coin, it's going to have a hard time getting listed, similar to Monero, for regulatory reasons or fear of regulatory reproach from various governments around the world, South Korea, US, EU. All these regions have been aggressive against privacy coins. So you're going to see a very limited set of exchanges, basically altcoin exchanges that have 100% fake volume, or Poloniex or Bittrex. It's going to be a few exchanges. It's not going to be Coinbase. It's not going to be Binance yet, and some of the other big liquidity areas. So when there's already the lack of interest in Grin, and it's not listed anywhere, it's hard for the price to do anything. It's kind of hard for people to even access Grin at the moment, unless you're mining it. Looking at the TA, the price chart, technical analysis, first thing that always pops out to me is declining volume. Usually when you see declining volume, this is since May, so it's been a few months now. When you see declining volume like this, there's almost always something going on here. It's either a divergence, which in this case it's a bullish divergence based on volume because you're getting lower lows in price. On declining volume, which is a bullish divergence, it says that the bearish momentum is weakening, which is kind of common sense. If less people are selling, yet price keeps going down, it says there's probably going to be a reversal soon, just based on exhaustion of sellers. The RSI does not show a divergence yet. You're not seeing higher lows on RSI with lower lows in price. You're just seeing selling exhaustion, really. But since it's been listed, it's just been straight down for the most part. You can see it actually had this Adam Eve attempt, but much like the rest of the market, leading into March, it sold off pretty hard, but it was unable to hold that floor. But up until February, it actually looked decent. So again, back to this mining ASIC thing, I think if the ASIC producers saw interest in pre-orders for these ASICs, this could have been a different story. But I think the writing was on the wall when these pre-orders got canceled because of lack of interest from people. So this is all part of the story. There's plenty of technical evidence that this could have had a decent breakout of the 200 for the first time in its history, and it just didn't happen, obviously. So now here's the next step. Here's the next rung on the ladder. Is there anything going on here? Not really. There's not really any type of reversal pattern. There's no inverted head and shoulders. There's no Adam and Eve. I was even thinking maybe diamond bottom thing, but that doesn't even make sense here. If you turn it on candlesticks, there might be a diamond bottom here. One thing that really pops out to me again is this VPVR. So this is volume at the price. And it just says there's a really strong resistance level at like 53 cents, 55 cents. That's really the line in the sand for any bullish momentum. My guess is the 200 is going to continue to decline here, and then you'll see potentially some action if it revisits the 50 to 55 cent area for some type of bullish thrust back to $1, back to this previous accumulation zone. But right now it just looks like the sellers are exhausting. And the cloud also shows the same. It's just nothing but bear. Really hasn't been above the cloud since inception. Much like Zcash, bash on Zcash a lot. Very similar picture for most of its life. Below the 200, below the cloud. So really none of this is telling you to get long. None of this is telling you to accumulate. It's really telling you be careful buying here because the trend is strongly bearish and has been since 2019. So really anything above, this is Grin BTC, but anything above 10, 11,000 sats would be the go time level. That's when the trend shift happens. That's always the safest long entry, just based on trend metrics here. And once again, the VPVR is showing you a pretty big accumulation area. It's been sideways for 3-4 months now in the 5,000 to 7,000, 75,000 sat zone, 7,500 sat zone. So anything above 10 is go time. Anything below that just says be careful because historically this has not been bullish at all.